I'm Mike Pettengale, President and CEO of vizsla-royalties. In this video series, we've already talked about what royalties are and how they differ from traditional mining companies. Today, we want to take it a step further and explain why investors find the royalty model so attractive and why companies like vizsla-royalties are set up to deliver strong, scalable returns to shareholders. Royalty and streaming companies have consistently outperformed traditional mining operators over the long term, both in share price performance and price to NAV or net asset value multiples. So why is this? Well, it's because the royalty model offers 1, predictable cash flows, 2, high margins, and 3, leverage to growth without operational risks of running a mine. That's why investors, from individual newsletter readers to professional analysts and institutions, often see royalties as one of the most efficient ways to gain exposure to metals. Royalty companies enjoy exceptionally high margins. Once a royalty is in place, there are virtually no operating costs, and revenues scale directly with production and metal prices. So, for example, a 2% royalty on a mine producing 1 million ounces of silver translates into 20,000 ounces worth of revenue flowing straight to the company's bottom line. If the mine expands production or metal prices increase, the impact flows directly to the earnings. It's a model that's both scalable and resilient, which is rare in the resource sector. The real appeal for investors is that royalties provide downside protection. At vizsla-royalties, we're insulated from rising costs, operational delays, and capital-intensive overruns, but we still participate in the upside when mine production grows, new discoveries are made, or commodity prices increase. Another important point is that royalty companies often trade at a premium to the mining company who operate the underlying asset. And this is in part because we earn revenue without operational risks, and cash flows scale directly with production and metal prices. Therefore, investors are willing to pay more for the stability and leverage that royalties offer. It's this balance of less risk than a mining company, but strong leverage to mining success that makes royalty companies a particularly attractive investment. At vizsla-royalties, our cornerstone royalty is on the Panuco project in Mexico, one of the most exciting silver and gold development stories on the planet. The project is in the advanced development stage, meaning the royalty is positioned to capture cash flows in the near term as production ramps up. This gives investors direct exposure to high-quality precious metals with significant upside potential, both on the operations side, but also on the exploration side. By focusing on high-margin royalties like Panuco and potentially targeting selective acquisitions in the future, we aim to deliver strong, scalable returns to our investors. So for anyone looking for exposure to precious metals with minimal operational risk and significant upside potential, royalty companies such as vizsla-royalties in particular offer compelling opportunity in the resource sector today. Thanks for watching. If you'd like to learn more, visit vizsla-royalties.com or reach out to our team at info@vizsla-royalties.com. Thank you.